All right, welcome back to the channel. I apologize to some of my Twitch viewers. We tried to do a live stream a little while ago. It didn't work out. And the reason for that is my internet is completely down right now. So what I'm doing is a little bit of a workaround. I have my telephone sharing internet to my computer so I can do some TA, and I'm using my older camera to record so I don't have to do any recording over Wi-Fi through the camera. So I've tried to set this up so we can go through everything today, and this is going to go strictly to YouTube. We'll do a live stream on Twitch either later today or tomorrow once the internet is back and it's stable and I can do everything. So for today, we're going to go over Bitcoin, Ethereum, EGLD. In the Twitch chat before the stream ended, somebody asked me to go through Cardano. I believe that was Edward. So Edward, I am going to go through Cardano as well. So we're going to do Cardano after EGLD. So let's go ahead and get started and go over some TA and hope that the internet does not cut out while we're doing this. So basically what we are looking at now is we are looking at Bitcoin. And the reason I always want to go through Bitcoin, and we're going to start with Bitcoin, is because Bitcoin is the reserve asset. Everything that's happening with Bitcoin is influencing the entire rest of the market. So we need to see what's happening with Bitcoin, and we need to see what it may be looking to do in the near future. So let's take a look. All right, the first thing that we want to notice with Bitcoin is we want to take a look at the support and resistance areas. So the first thing you see here is you see that we're starting to put in a good amount of support in the $48,000 to $50,000 range. Now, the only thing to keep in mind here is that we have a lot more support down here between 30,000 and 35,000, even up to 40,000. We're actually starting to put in a little bit more support now between 45 and 49,000 than we had down below at around 36 to 38. So that's a good sign. That means that this sideways trading that we had from around 46,000 all the way to 50,000 has put in a good amount of support. And we've confirmed that there is good support there by looking at the drop, right? We saw a good amount of support in that area. So I'm going to go ahead and hide this so we can just focus strictly on the chart. I'm even going to get rid of the moving averages for right now. Now, when we look at Bitcoin, we're seeing something key, all right? If you've been following this following this channel for a while, you know that these trading channels we're looking at have held up very accurately. We've had them since around 18,000. We dropped below the trading channels. I could have added another trading channel here. There technically is one more below this. I haven't added that in yet because we really need to see a drop below the yellow line and continued trading in this area to confirm that we're even going to go back to that channel. But that channel does have a clear bottom, so I might add that in for the next one. Right now, though, we are seeing us trade within this channel. We went above it once, past the green line. That was around when we were passing 55 to 57,000. And now we've come back below and we're testing the bottom and we've confirmed support here. We're putting in a lot more volume. We need to put in more because if you look at the entire scale of 30 to 40,000, you look at that whole area, it is definitely showing a lot more volume than what we have here. When you zoom in a bit, you see the areas where the volume really exists down here, but we can definitely see in this larger time frame that we need to put in more volume between 46 to 50,000. Now, that doesn't mean we have to drop back down to 46. What we could do is just keep going sideways and go past this channel. So we could just keep trading sideways and go past this channel, and that in itself will put in a lot more support in that range. So that's a possibility. We could see that, but what I'm really looking to see now is if we drop below the yellow line and if we continue to have support, and do we come back up and test the green line? Because if we do, if we test this green line very soon, we're looking to pass 57,000 and start reaching 60,000 by early March. So we got to keep in mind whatever's happening with Bitcoin is going to affect everything else, so we really need to watch it. The next thing we're going to look at on this 4-hour chart is the TD sequential. You can see that the TD sequential gave us a big buy signal during this drop, and we did recover from that. We've already reset. So now we need to see, do we keep trading sideways and the TD sequential, does it keep resetting? Or do we have another drop and start putting in another 9 flash at some point? I would prefer to see us move up and test the green line first to around 57,000 and then possibly drop back down to 50,000. That'll help us build a lot more volume before we break out past 60. So, Bitcoin in itself is not looking bearish at all. It's looking very bullish. It's still maintaining an uptrend. And on top of that, today, Michael Saylor and MicroStrategy have purchased another $1 billion worth of Bitcoin at an average price of around 52,000. So they are doubling down. They're buying more Bitcoin. You have Square just yesterday announcing that they have purchased another $170 million worth of Bitcoin. So during this drop here, exactly what we thought was going to happen is what happened. People purchased a lot of Bitcoin. You had a lot of people come in and buy, and you see these green candles at the bottom. They are far surpassing the red candles. The red candles, which is where we had the majority of the sell volume, was immediately met with a huge buy candle, and that didn't even move the price a lot. So what does that mean? That means that when MicroStrategy was buying and when Square was buying, they were buying Bitcoin in small transactions. They weren't affecting the price. And that's a very good thing because they managed to put in a lot of buy volume. They didn't manipulate the price and they got great prices. So the real people who have missed out here are the people who got scared during this correction and sold. Because now the problem is if they sold at around 45,000, they may not get a buy chance back. So you might see some people coming back in now realizing that, hey, Bitcoin's more stable than I thought. I shouldn't have been scared. And people are going to learn that more as we keep moving. Let's move on to Ethereum. Now with Ethereum, we are seeing very similar type trading, but this drop for Ethereum is quite significant because not only did this drop go past below 1400, but it also kind of put us back into the 1500s, 1600s, and we traded in this range for a decent amount of time. Volume still needs to build up more, so the fact that Ethereum is putting in a lot more volume in this, 1500 to 1800 area is not a bad thing. The problem with Ethereum right now is that even though it's holding these support and resistance levels, there's just no indication on when it's going to go past this trend line again, right? When is it going to go back up to the 1900s? The reason that we don't know that is because Ethereum is near unusable at the moment. With the Ethereum blockchain, the gas fees are so high that you literally don't have a reason to use it. People are starting to use the Binance Smart Chain a lot more, and then you're also having people look at different DeFi protocols. And if Ethereum doesn't get their act together, they are going to lose a certain amount of users. That doesn't mean they're going to lose buyers because there are still a lot of retail investors getting into the space, and they're going to see that Ethereum hit 2000 and they're going to want to buy it and hold it for the other jump up back to 2000. That's a pretty decent increase. I mean, from where Ethereum is trading right now, just to go back to 2000, we're talking about a 25% increase in price. So people might be buying into Ethereum now regardless of the gas fees because they are anticipating that Ethereum and its network effect are going to come back. And essentially that means that Ethereum buys more time with its value proposition to fix the gas fees. As of right now, the last thing I read said that they're looking to put in a new improvement within the protocol sometime in July that may, change the model of gas fees, and they might start burning some Ethereum tokens that could help the economics and not only fix the gas problem, but also increase the value of each coin. So we'll have to see if that gets approved by the Ethereum validators, and we'll also have to see if Ethereum really does fix those gas fees, and will it be delayed? I mean, if it's done by July, Ethereum could be trading sideways for quite some time unless you just have massive speculation coming in that's betting on Ethereum fixing their issues and just going back into a large uptrend. A lot of people are still calling for that. I mean, I still think it's very possible that when gas fees are fixed or when it's close to being fixed, the price can shoot up. And you could also have a lot of speculative investors coming in wanting to buy and hold Ethereum because they see it being a lot more valuable in the next year or few years or whatever it may be. So keep that in mind. Ethereum could go sideways for a while, but for people looking to get into Ethereum, they're probably going to be doing it at these prices because it's unlikely that Ethereum will fall below 1400. It may not even drop back to that level again unless the market continues to correct. And then if it does drop, seeing it go below 1350 is going to be very, very unlikely. There was a good amount of support at that range. There's a lot of support waiting at around 1350 to 1300. So continuing to trade between 15 and 1800 is I think what we're going to see for Ethereum now. Unless we see Bitcoin have a massive rise, Ethereum will likely follow sometime after that, not too far, because people are going to look at that being the next best investment to Bitcoin because how well known it is. A lot of people don't even look into the blockchain and the gas fees. So keep it in mind. Ethereum is looking like it could be on a sideways trend, but long term it's still looking bullish because of its network effect and because of the fact that the gas fees will eventually be fixed and the blockchain will then be used heavily. And at that point, you could see something like BNB have a massive drop, because once the gas fees are fixed, it's very likely that you see people migrating off the Binance chain and back onto Ethereum. So keep that in mind if you're investing in BNB also. Ethereum and BNB could just, have a value shift when that happens. So keep it in mind. Next, we're going to look at EGLD, and we have quite a decent amount of stuff to talk about with EGLD. I'm actually going to go onto my other chart here. This is where I normally track EGLD. So I'm looking at a number of things here, all right? The first thing that I want to show you with EGLD is just the descending wedge. So we started to see that this pattern had initially been a descending wedge, then we started to see a smaller descending wedge, then we started to see a symmetrical triangle. Now we are seeing it turn back into a descending wedge. And normally with a descending wedge, what you want to see is a breakout. That's what you expect from it. I told you that on Twitter, and we have broken out of the descending wedge, but we don't have a confirmed breakout yet. With this descending wedge, we really can extend it even further. We can make the lines go all the way down to here on this wedge. We keep it at the peak of the majority of the candles, and then we can take these lines and we can readjust them to be at the base of the candles. And you can see that this descending wedge could keep going for a while. Now, what we want to see with the pattern like this is that we have a sustained breakout, right? We haven't confirmed that yet. We've gone past it a little bit, but we've done that numerous times. Now, what you want to see is you want to see this line either continue to move up in that nature, or you want to see that it comes down and gets support on the top of the wedge, and then at some point bounces off of it, right? And if it does have a sustained breakout, we could be looking at a price target of anywhere from 250 to 260 after the breakout. Now, the breakout could be slow, right? You could break out of something like this in a very slow fashion. Now, this is a decent time frame, right? It goes all the way to March the 11th. If we scroll to the right here, you can see we're looking at March the 11th on the bottom of the screen to be at around this area. So now what we can look at is we can see that if we have a breakout here and we want to go back up to some of these larger levels, so let's zoom in here, and we have a breakout, that doesn't mean it's going to be fast, right? You could end up seeing something like this. We could see some sideways movement here, a bounce off, and then a slow rise with sideways trading. So you could see something like this over time, and we go back to the 260 level. Now, if we do have trading like this, remember, we would be putting in an ascending wedge, which is a bullish, or which is a bearish pattern. So that would be a pattern like this, right? If we end up on the way up putting in a bearish pattern, then that's a pretty interesting thing, because that means once we reach the 260 level, this is pure speculation at this point, once we reach that 260 level or 250 level, we could then see the price drop back to 200 and consolidate and then keep moving. So this could switch from this downtrend into a larger sustained uptrend. So keep it in mind, none of that's confirmed yet. It's all speculation. Remember what I tell you with chart analysis is that it's only meant to give you ideas for what might happen, and you have to weigh those ideas in probability to see how it's looking. Now we're going to check a couple of other things. We want to look at one thing that's very important here is the moving averages. Okay, so I'm going to zoom this out a bit so we can really clearly look at the moving averages. Okay, so when we look at these moving averages, the first thing we notice, and I'm going to get rid of this descending wedge so that it is not bothering us. Okay, so we're going to get rid of that. So now what we look at with this is something very, very interesting. Okay, we have a number of bearish things happening with the moving averages. And the only way to fix this is to continue an uptrend and then the lines start moving upwards again. But during consolidations, this is common, but it can be an indication of a price drop, and it could scare people into buying, and they might be waiting for a slower move up to confirm that these patterns are changing, and they're very slowly starting to change. So the first thing to keep in mind is the 20 EMA. That's the blue line. That's the 20 exponential moving average. That has fallen below the 50, which is the orange line, and it's also fallen below the 100, which is the 100 exponential moving average, the aqua line. Now, the other thing that's quite bearish is that the 50 exponential moving average is also falling below the 100 exponential moving average. So as you start to have the 20 and 50 start falling below the 100, then that is showing you that the price is quickly moving down. And it makes sense because during this consolidation, we're seeing that. But now we have come back and we're testing both the 50 exponential moving average and we are testing the 100 exponential moving average. So the real key to fix this bearish pattern is to continue an uptrend and start to turn these into support. We want to trade on top of the orange line and the aqua line. Now, if that happens and the price moves up, you're gonna see the 20 slowly start coming back up and cross over as these ones continue to go sideways. Now, when that happens, and there's too many lines, okay? So when the price starts moving above these two moving averages and it gains support on top of them, then what you see is the 20 move up. So that's really what we want to see, because in a downtrend scenario, we're looking at this orange moving average starting to come further down. We're looking at the blue starting to come further down. The 200 will continue to go sideways. And if both of these cross below the red line at the bottom, that's very bad. You know, that means that the price correction is nowhere near finished. And we could be looking for a drop all the way back down to $65, $70. So you have to keep it in mind that these moving averages are basically telling you the momentum. They're telling you how is the price moving. And right now we can see that it's in an undecided area. All these moving averages are starting to converge, and that means that the price is getting squeezed in this 110 to 120 range. And we need to see which way is it gonna go. Is it gonna go up or is it gonna go down? That's going to confirm the trend of these moving averages. So it's a very critical point, because if you look at the prior history, when the moving averages converge and they converge heavily, then you end up having a big move. Throughout this entire run, it's been, a move up because we've been moving in that direction. Now we are reaching a consolidation point. The moving averages are starting to get constricted again and starting to cross, meaning the price right now is undecided. The momentum is undecided. So we really need to watch this to see what happens. And keep in mind, anything can change this. In the next few weeks, I think in early March, we're looking for the DeFi 2.0 module of Elrond to go live, I believe on day 95. Now, when that happens, we're bringing in a lot more functionality to the Elrond blockchain, and you could see the price reflect that, meaning that, somewhere in the next 2 weeks of sideways trading, we can start having moves up, and we can start having these moving averages start shifting direction and move back in an upward motion. And when that happens, you're really going to see them get constricted again and converge and pick a direction. So keep it in mind. We do have right now a scenario where we could go either way. So you have to remember the risks with that. The risks with that are whether you bought higher, whether you bought lower, you could be looking for another drop, and you need to figure out, is that an opportunity for you? Is that an exit for you? Are you going to put in a stop loss? Are you going to, put in a buy order at lower prices? You really have to figure that out. For me personally, I already have buy orders sitting at $70, $80, and $60. Now, if it drops to 80, my buy order will trigger. If it drops to 70, my buy order will trigger. If it drops to 60, my buy order will trigger. If it doesn't drop to those levels, that's fine, because I'll continue to do well on the EGLD I already have and that I'm already staking. So I have my strategy in place for the potential downside. People need to figure out what is their strategy going to be if that does happen. There's no guarantee it's going to happen, but I like to be prepared because it's worked out very well for me in the past during corrections to get assets that I want at a lower price. So keep it in mind. That's kind of what I'm looking at right now. Very, very critical point for EGLD. We have to keep an eye on where these moving averages go, how they end up, and also what happens with this descending wedge. Do we get support on the top? If we get support on the top, that is a great sign of a potential move upward. And if we get support on the top, or if we start moving up, and we move past the 150 area, there's a good chance that we get a ton of support below us and we flip this 140 to 150 area from resistance into support. When we do that, that's a good indication of more sideways trading between 150 to 170, building up the support in this range and getting ready for a move further up. So keep it all in mind. Elrond is in a really crucial position right now, so you need to watch it closely. Being bullish on the project is great because, I mean, I truly believe it's a bullish project, but you also have to be sensible about the current price and the market volatility and how you are going to approach your strategy to take risk management into consideration. You don't want to always believe, hey, it's only going to go up in the short term, and then it goes down, you're not prepared for it, you sell everything, and then when it does have a run up, you regret it. So, and it could be the same in the opposite direction, right? You want to make sure that if you put too much risk in here, that you're not going to be in a bad position if it drops, right? So you need to have both methods figured out and have a plan for both. So I really hope this information helps you and you can come up with a strategy that works for you. Keep in mind that my charts are available in the description below. You can access my Bitcoin chart and my eGold chart. Just click the links. You'll see this chart come up along with any other updates I make to it. You'll see those. So the next thing we are going to do is we're going to get rid of the exponential moving averages. We're also going to turn on the Bollinger Bands. Now the Bollinger Bands really show when you can expect a move to occur. For example, the Bollinger Bands got constricted here. When they did, we saw a downtrend. The Bollinger Bands getting constricted is an indication that a price is losing volatility. When the price loses volatility, you can expect volatility to come back. It moves in cycles. So as we are seeing that's starting to get constricted again, we really need to see what happens when the Bollinger Bands move in this direction, right? When this comes here, when this comes here, and we have another constriction point. Does the price break out upwards, or does the price go down, get support, and then break out upwards, or does the price just fall through, get support here, and possibly drop? We don't know yet. There's a number of things that could happen, but the Bollinger Bands getting constricted can at least give you an idea of when something might happen. So turning on this indicator can give you a good idea that, okay, something might happen. I need to come up with a strategy if it does. So keep it in mind, it's just another good way to see what's going to happen. And you can see the Bollinger Bands, once you start trading in an upward direction, you can look at the bottom of the Bollinger Band and the top of the Bollinger Band for your support and resistance levels. So for example, right now, if the price was about to drop, I would expect to see some support at 100 because that's where the bottom of the Bollinger Band is. And if this starts going up and crosses the yellow line, then I'm going to expect to get support at 115. But if we see both, if the top is moving down, the bottom's moving up, and it's getting constricted, then I'm going to expect a big move to occur sometime soon because the price has really lost a lot of volatility, kind of like it did in this area here. Okay, so that's pretty much everything for eGold. Right now, I think we just need to keep an eye on the short term and see what happens as we start coming back down and testing the top of this descending wedge. Is this an actual breakout, or is this a fake out? Is this just another move outside to drop back down and come back inside? Just like we saw here. Just like we saw here. You know, we need to watch it. All right, we don't have anything definitive yet. We need more data. We need to see what happens in the next few days. But one thing that is looking very interesting to me is that the volume since the top of this has been on a very steady downtrend. And that tells me that at some point in time, the volume is going to come back. Volume moves in cycles. And when it does come back, we're going to see a big move. We just don't know 100% yet which direction it's going to be in. I tend to think it's going to be a bullish move because there's been a lot of consolidation, but I could be wrong. So keep it in mind, make your own decision, and I hope you do well with it. The next thing we're going to look at is the Elrond growth charts, and basically what we're looking at here, this is on growth.elrond.com. It gives you a lot of great information. I'm going to zoom out a bit on this. Actually, I don't know if I can do that. So yeah, the screen size doesn't fit too well with what you're seeing, but we'll look at the main charts. On the right-hand side here, we're looking mainly at, yeah, okay, so that's unfortunate. But on the right-hand side here, we're looking mainly at at the staking numbers. So you can't see it, but these panels on the right-hand side, they tell you the circulating supply, the staked supply, and the floating supply. So keep an eye. But the main thing is the charts. You can see them very well, so we're going to go over the charts. You can see that the market cap has been pretty steady at the $2 billion mark. We've fluctuated below it. Now we're coming back up to the $2 billion mark. So the key is to see us break past 2.1 billion as the price goes up, and then hold that 2.1 billion market cap as a support. Right? We also see that the exchange volume has dipped down and has started coming back up. Now that's in the last week, right? We see a peak up around February 21st. Now the volume is coming back down. And as the volume comes back down, we usually have another spike of volume, right? It moves in cycles. So we should expect that. If we look at it on the monthly chart, you can see similarly during this entire consolidation, volume has been steadily dropping. And eventually that volume is going to come back and we're going to see another big move in either an up and down direction. I tend to believe it's going to be an upward direction, and I like the fact that our correction has been holding very, very well above 100. Even though it's dipped below it, we're staying above it, and that's a good indication that as we continue to move up and the bull run picks up again, we're going to move back up, we're going to see the volume spike, and we're going to see a huge price increase. All right, now we're looking at total adoption. I'm going to look at this in the monthly chart. Now, one thing that you would know about this total adoption chart, if you looked at my, if you follow me on Twitter, is that I gave you some great numbers. If you highlight your mouse over any of these data points, it tells you the total amount of coins that, the total amount of coins that were in circulation, that users are using, the addresses with non-zero balances, the addresses with greater than 0.1 EGLD, and it's giving you dates at the bottom that are correlating with these numbers. So it's a very interesting thing to look at. I did some comparisons and I really, really liked what I saw. So keep an eye on this. It's extremely, extremely helpful for you to get an idea of adoption. Okay, once again, growth.elrond.com. All right, the other thing that we saw, and I put this in my Twitter just a couple of days ago, is the exchange flow. We saw that there was an outflow of about 1 million coins. Now that's a huge amount of coins, and normally what you're going to expect is that type of outflow could be exchange activity. Even I suspected that it could be something happening on Binance or another exchange. They could be moving EGLD from one wallet to another, and it looks like that is what happened because we no longer see that outflow of 1 million coins. We saw it yesterday, it's gone today, so that means that it was likely constricted outflow within an exchange, so it's no longer showing on the exchange flow chart, which is fine. We don't mind. Even though 1 million coins were removed, they were moved within an exchange. That doesn't really affect us. Now, the good thing to know about this is that we're starting to see a shift since, if we look at this in the last month, we're starting to see a shift in what's happening with the inflow and outflow. So you can see they were just moving very much together, and we were seeing that the inflow to exchanges had gone pretty high during February 17th to the 20th. That means that more EGLD was being sent to exchanges. It's not really what you want to see because the more EGLD being sent to exchanges means it's probably going to hit the market and be sold. What you want to see is something like this. You see the outflow here in the beginning of February spiked. That means a lot of EGLD left the exchanges as the price went up, and it's probably because at this point a lot of it went into staking. Now we have seen these converge a lot and we haven't seen a big shift, but if we look at the last week, the interesting thing is that the inflow to exchanges has dropped significantly and the outflow from exchanges has started to increase. So we're starting to see that there is, over the last 4 days, there's more EGLD leaving the exchanges than there is going to the exchanges. So that's a good thing. That could be more people getting into staking. Could be more people transferring their Elrond onto, their other external wallets. Like right now, I think wallet.elrond.com is one of the main ones. You can stake there, but you can also hold there if you don't want to keep it in an exchange. So it could be a very good indication that people are taking their EGLD off of exchanges and moving it to other wallets and possibly learning about staking, considering staking. And, we really have to look at what happens with the staking metrics. Right now, the staking metrics have stayed pretty static. You can go to these data points on the staking metrics and take a look at what's happening, but they've stayed roughly the same, meaning, that's a good thing and a bad thing because it's also telling us we haven't seen a huge increase in staking, but we have barely seen a decrease in staking. Nobody's been leaving staking during this drop, so that's a good sign as well. Okay, that's pretty much everything for Elrond for today. We will move on to Cardano. Okay, so with Cardano, we are seeing something very interesting. I want you to take a look. This is Cardano on Kraken, right? You see this gigantic drop. Cardano went down to 20 cents. This was a flash crash that was specific to Kraken. There were a couple of issues that happened on a few other exchanges, but a lot of people got liquidated on this flash crash. They lost all their money. Now, I want you to know about the dangers of leverage trading, so I'm working on a video where we're going to talk about leverage trading. We're going to go into detail on this flash crash that happened with Kraken, specifically with Ethereum and Cardano, and I'm going to explain to you what happened to the people that were doing leverage trading, and I've already communicated with some of them and started to get information, so it's going to be a very useful video. And you really need to know the dangers of leverage trading. You know, it is not safe, and I really want to have you be aware of the kind of risk you're putting yourself in if you ever decide to trade on leverage. So we'll go over that probably in the next few weeks. Sometime in mid-March, I'll have all the data together, and I'll start putting together a video that'll go direct to YouTube. So make sure you stay subscribed, make sure you like and comment and all that stuff, and you get all this content as it comes out. It's going to be very helpful for you if you're new to the game, or even if you have been trading in leverage and you don't understand the risks that you're exposed to. So keep that in mind. So with Cardano, we're seeing a couple of things. The first thing I want to do with Cardano is I want to put in a brand new Fibonacci retracement here, and that Fibonacci retracement is going to give me a better idea of the support and resistance levels. Now you can see I had a previous Fibonacci retracement that was here from a very long time ago. I'm going to hide that, and we're going to start this new Fibonacci retracement right where this entire run began at about 40. So let's put in a good time frame here, and you'll see how I create the fib retracement. Now, sometimes I modify these, but we're gonna start off with the first candle that really kicked off this run, and we're gonna move up with the trend, okay? And we're gonna give ourselves a high point of $1.50. So let's do that. I think that's a good jump from where we are now. It's a good area to keep track of. So we're gonna do this. So we've put in the fib. Now the next thing I'm gonna do is I'm going to right click on it, and I'm just going to cement my areas. So if I go to coordinates here, I can choose my starting and ending points. I like to start on fresh points, so we're gonna make the first price that we start at 0.36. We're gonna make our top price 0.50. We're gonna keep the coordinates the same, hit OK. That's gonna adjust us to the exact levels that we wanna look at. And the next thing I'm going to do is I'm going to lock this fib retracement in place. Now, if we take a look at this fib retracement, very quickly created, very rudimentary. Sometimes I take a lot more time in creating these. But for this one, if we're just looking at some key support and resistance areas, you can see during this upward momentum, we really hit a lot of resistance at the 0.5 line. That was sitting at around 93 cents. We traded up there, we fell back down to the trend, and then we went back up to 0.5. When we broke out of it, we didn't really test the 382 line. That's at around $1.05, $1.06. Now, we fell back below there. We got support here at the 93 cent area again, which is expected considering we did a lot of trading at this line. And now we've broken back out above the 106 area. And you'll notice that we did hit resistance there. The thing that we have not seen yet is that we haven't seen the price come down and really put in support at the 106, 107 level. So Cardano is a very bullish coin right now. It could just keep moving up, but I think it's very likely that with Cardano that we see a drop back to this 106 level and do a little sideways trading here before we move up. And once we move up past $1.20, that is when things get really interesting. It puts us past the 236 line, and I really assume that one of two things could happen, right? We trade here, we break out here, we'll probably come back and get support at the $1.20 line, and then if we move up, we may even get more consolidation once it hits $1.50, and we come back and we test this trend line. So something like this for Cardano is very likely. It maintains its bullish momentum, and it also allows us to have people taking profits at good levels. Cardano, I could see going much higher than this, but I don't see it just having another huge breakout to $2 immediately. I see it having uptrend, downtrend, and something like this makes a lot of sense because it not only allows us to test the current support level, it allows us to move up past $1.26, come back and test it, move up all the way to $1.50, have a sell-off, but come back and get support not only at $1.25, $1.26, but also at the uptrend line, which we've already seen it hit once. You know, you've seen it hit here one time, here 2 times, and here 3 times, right? I'm not going to include this massive flash crash because that was an issue with the way Kraken does not mitigate risk on their exchange when it comes to leverage trading. They are not doing it for your benefit. So it's very unfortunate that a lot of people lost a lot of money during that type of a drop. Anyways, that's what I'm looking at with ADA. I'm looking at a sustained uptrend, and I'm looking at it coming down to test certain levels. And I'm not expecting a huge jump right up to $2. I'm expecting a slow, sustained move. If it follows this area, then we're basically looking at what could happen between now and March 8th. Now, if I'm wrong about this and we do have a massive move, then we have to come back and reanalyze. So we're going to add Cardano to the list, and we're going to come back and reanalyze if we have to. That, I believe, is everything for today. We've looked at Bitcoin, we've looked at Ethereum, we've looked at EGLD, and we've looked at Cardano. I'm going to do some more analysis on Cardano offline because I do think these moving averages are looking very, very bullish, and I want to see what other indicators I can find for Cardano that are giving us any information on future movement that I may be missing from just a rudimentary fib retracement analysis. So I'll do more analysis on Cardano. So if you're here for some Cardano content, make sure you come back. I might just do a video dedicated to Cardano and go over a lot of the technical analysis that I've done on it offline, but I want to do a lot more of it and kind of put my notes together if I'm going to share it with you. So that's pretty much everything today. We've gone over everything. We are still in the midst of this correction. We haven't confirmed an uptrend. We haven't confirmed a downtrend. We are essentially trading sideways. The only good thing that I see is that our primary reserve asset, Bitcoin, is moving in an upward direction since the time it broke out at around 38,000. Since this area here, it is confirmed to be in an uptrend. We have not seen a significant enough of a drop to say that this is moving down further. Right now, it seems like this consolidation is already being recovered from, and we're starting to make the next uptrend. And the slower it goes, the better. So let's keep an eye on things, you guys. If you have questions, throw them in the chat. And I apologize for everyone who came on to Twitch and we couldn't stream live. When my internet's back, we'll try to do that live stream and Q&A session. I hope to do it today. If internet's not functioning that well, then we'll try to do it tomorrow or the day after. That's about it. Make sure you leave me questions, comments, like the video, subscribe to the channel, and check my description for the links to my Twitch channel, the Twitter, you know, any referral links if you need them for Binance or Maiar. There's also my charts, so you can access the Bitcoin chart, the EGLD chart. Those chart links are in there for you, so feel free. And, you know, you can always reach out to me on Twitter, too, if you have questions or if you ever want to join a live stream. I try to give you at least a 10 to 15-minute heads up when I decide to go live. That's it. We're going to wrap everything up for today. Thank you again for joining me. I will catch you guys next time. Trade safely, perform risk management, and I wish you the best. Peace.